Welcome to Goldstone Finvest. I'm Prabhat Majumdar. I will share today's market update. Indian markets recouped some of the losses of the previous trading session on March 1 on positive global cues. Global markets were on its upward rally owing to the much anticipated US stimulus package being approved and reports regarding the progress in the vaccines. The S&P, BSE, Sensex and Nifty rallied more than 1.5% each. The Sensex rose 749 points to 49,849 while the Nifty closed with gains of 232 points at 14,761. The Nifty started the week and the month on a solid note, trading higher throughout the session to rally. After opening gap up at 14,702 levels, the Nifty hit an intraday high of 14,806 and low of 14,638 amid volatility. The index settled at 14,761 levels. The index formed a bullish candle that resembles inside bar pattern on the daily charts as the Nifty traded within the previous day's range. Experts say 14,800, which was the intraday high on March 1, could act as a crucial level for further upside. As the near-term trend is seen sideways, positional traders with a high-risk appetite can consider shorting as the Nifty nears 14,900 with a stop above 14,920 on a closing basis and look for a modest target in the zone of 14,700 to 14,650. The Nifty formed a small bullish candle, but an inside bar or a Harami cross on the daily scale indicates an absence of direction. It appeared to be the day of consolidation on the bourses as the Nifty 50 respected the low of preceding session and traded inside the long black day formation registered on last Friday, which depicted inside bar kind of formation. India VIX also fell sharply by almost 8.94%, which experts say could give some stability to the market. Looking on the options front, maximum put open interest was seen at 14,000 followed by 13,500 strike, while maximum call open interest was at 16,000 followed by 16,500 strike. The data indicates that the Nifty could see a wider trading range of 14,200 to 15,000. The Bank Nifty opened gap up at 35,374 and moved in a range of 600 points. The index closed the session with gains of 492 points at 35,296. It formed a doji candle on the daily scale as it closed near its opening levels. The Bank Nifty has to cross and hold above 35,500 to witness a bounce towards 36,000 and 36,250. While on the downside, support is seen at 35,000, then 34,500 levels was observed by the experts. Encouraging third quarter GDP numbers, February auto sales and steady PMI manufacturing data along with optimism over US stimulus seen in the global markets lifted the sentiment. Domestic markets kick-started the month on a strong footing with increased optimism led by GDP reaching positive numbers, improving auto numbers and steady PMI manufacturing data. The auto sector was in focus as the sales numbers for February were in favor of manufacturers. Global markets were on the up as the much anticipated US stimulus package was approved and on reports on the progress in the vaccines. Except PSU Bank Index, all sectoral indices ended in the green with Nifty Auto, Energy and Metal indices rising 2% each. BSE mid-cap and small-cap indices added 1.5% each. Sectorally, the action was seen in infra, metals, utilities, auto and metal stocks, while some profit taking was seen in the telecom space. Positive global cues, steady micro data as well as strong auto sales data helped the sentiment. The next crucial resistance is placed at around 14,800. If the bulls manage to keep the index above 14,800 in the next session, intraday strength can expand to 14,900, whereas 14,638 can be considered as near-term support, as a breach can weaken the index to 14,450 levels. For the time, larger trend would remain sideways between 14,900 and 14,450 in the near term, unless the bulls manage a sustainable close above 14,920. Here is what expert says investors should do on March 2. Our experts said that the market witnessed some lackluster movement. The Nifty is still trading below the resistance levels of 14,850. A breakout above 14,850 is critical for the market to regain momentum. It will be prudent to wait for a decisive breakout above 14,850 and technical factors to improve before going long in the market. We retain our cautious stance and advise traders to refrain from building a new buying position until further improvement. It has to continue to hold above 14,700 to extend its move towards 14,900, then 15,000. While on the downside, immediate support exists at 14,600 and then 14,500. The index had reached the junction of 40 DEMA and the daily lower Bollinger Band on February 26. These parameters together act as good support as was seen on March 1. The index has seen a lower Bollinger reversal and is expected to head towards the middle line in the next few sessions. The overall structure shows that the index is likely to stay in a consolidation phase for the short term, where the range would be 15,000 to 14,400. The daily Bollinger Bands are in a contraction phase, which is in line with expected consolidation. As stated by Goldstone experts, traders should trade extremely cautiously with strict stop losses and should follow support and resistance levels on strict basis. Follow support and resistance levels along with trading call as published on our Telegram channel. For regular updates, like, share and subscribe our YouTube and Telegram channel. Also follow us on Twitter and Instagram. Also be a part of our Facebook family. Views by Goldstone Finvest. Let's build fortune together.